Well, hello everyone. It is that time again. We're going to do the annual analysis of where does Tesla end up in 2024. And yeah, I am going to do the super bear case this year because I need to get super conservative here and give you the absolute bottom number that is, in my mind, conceivable, short of some major war or some incredible black swan situation, or just something going very badly wrong. So I'm going to start with that case, and then I'm going to go to a bear case, and then a base case, and then a bull case. And I think I'm really looking for your comments, of course, because I want you to tear this apart. Let me know where I'm wrong, because later this week, I'm going to go up against Larry, and Larry's going to have his numbers, and Larry and I are going to compare. We're going to duke it out, and we're going to come out to the best possible result. But if you guys show me in the comments below where I'm messed up, then you could help me to prepare so that I'm going to win against Larry, because I want Larry to capitulate. Anyway, so I've got some assumptions here as we go into this. This is Randy Kirk. Please hit like and subscribe and notify. So much. You got the regular Sunday night program coming up tonight after the game. I think I'll just publish it right after the end of the second game. And that way it won't interfere with your decision to watch and figure out what's going on with regard to all the stuff that's coming up next week. It's going to be a big week. The Fed, of course, will speak this week, and that should be challenging. Anyway, then if you haven't bought your Cybertruck bottle opener yet, I don't know what's taking you. And if you've already bought one or two or three, you know you need more because you've run out, and you need more for friends, family, coworkers, buyers, and all kinds of other folks. Okay, let's dig. Oh, Patreon. It's time to join Patreon. There's really good. Do you need better incentives? I don't understand. I need more people to join Patreon. Okay. 2024 Super Bear case. These are Troy Teslike's numbers that he has published now. Now, these are not by the quarter. I didn't bother to go back and see exactly what he said each quarter. What I'm looking at here is his grand total for the year, 2,070,000 units. He is the lowest of anybody. The street is 100,000 higher. Everybody that is out there is at least 100,000 higher. Some are even more than that. So I thought, what the heck? Let's take Troy's number, and he almost always increases his number during the year. But how much more bearish can I be than to take Troy's number and not add anything to it at all? All right. And then I'm going to take the average selling cost at exactly the same as it is right now. So not going to go up, not going to go down. There might be some increases here and some decreases there, and some end of quarter sales, and who knows whatever else. We got some changeovers maybe to the Model Y later in the year that could affect things. I'm just going to assume straight across 44,500, the same as the fourth quarter. Then we've got the total auto revenue. That's just a multiplication. Now we have the margin. What am I going to do with margins? I'm also going to keep it exactly the same at 0.18. Okay, it was like right around there. Okay, I'm just rounding things off. I'm a simple man. I don't want to complicate this issue. So these are the numbers I'm coming up with for the year at 0.18. No change, nothing at all. Now, if you watched my video the other day with Jeff Lutz says that he would anticipate as much as a 2% change bent to the benefit on margins, on cost of goods sold, rather, per quarter, and therefore an 8 to 10% for the year. And I'm not considering that at all. I'm not dropping the cost of goods in this. I am not increasing the margins. I am not. So this is bear. This does not take into consideration what Jeff is suggesting. Now, the other ones, I will take that into consideration. All right, then we've got total auto gross profit. Again, that is just a multiplication of line 97 with times line 98. So we get total gross profits for next year, 16.6 billion. All right. Now, energy profit. I am taking here Elon's word that they're going to ramp this thing up to 100% by the end of the year. I am trying to do this at a very conservative level. Remember, we don't just have energy storage units. We also have the power walls. We also have planning and design, which they charge extra for. We have installation, which they charge extra for. We have potential for the software, the maintenance over time, all of that's in there. The other thing is we have bookkeeping issues that can throw sales of the actual units. I mean, they may already be shipped, they may even already be installed, and yet we're not able to realize them yet in profits. So I've kind of juggled all that together, and I'm saying we go up to a total of 3.9 billion in earnings on energy next year. Oh, this doesn't include Shanghai, which probably is up and running and actually shipping by the end of the year. So that's not in there either. So I think this is about as conservative as I can go. All right. Other profits. In this, you have services profits, which are growing steadily. You have all the money from any kind of special incentives and things that are coming in from, any kind of extra numbers that might be coming in from Bitcoin going up, whatever it is. I'm saying that is going to total for the year about 2.7. Then we've got the IRA money, specifically the money that is going to be coming in for the batteries. I've done a couple of videos on this before with Jeff Lutz last week. I think we talked about it when I was with Larry Goldberg on Friday. We talked about it with Bradford Ferguson on Thursday. Everybody agrees that we're probably looking at somewhere around $2.2, $2.5, $2.7 billion. I'm sorry, $2.2 billion in profit, in income that's going to affect cost of goods sold. I did not include it in the number above because that number is my real cost of goods, if you will, number. This number will turn out to show in cost of goods sold, but I'm going to put it here as a separate line so that we can manage it separately, and 2.2 billion for that. Again, this is only about the batteries. This is really only about the batteries that we're making in Austin, the 4680s. It doesn't include benefits that we're getting from Panasonic. It doesn't include the benefits we're getting from the $10 of some batteries that we get from others that we then put in packs, which is $10 a kilowatt hour. None of that's in here. This is just 4680s in Austin. So this number should be, again, super conservative. That gives us a total profit of 25.4 billion. I'm saying overhead increases slightly every quarter. It gives us to 10.7. You subtract that, we get GAAP earnings of 14.7, and we get an EPS of 4.26. We give that a 30 PE, and we end up at $130 a share. All right. So this assumes everything's wrong, couldn't be worse, horrible year, and we end up at $130 a share. That would not be good. Now that's also a 30 PE on prior years, on current year earnings. That's not many people will only take that as their method for deciding this. Most people are going to be looking at forward year earnings and also giving a multiple based on how much they think the earnings are going to jump up in the next year. Now, this again is taking you from 11 to 14.7, about 11 billion in 2023 in earnings, a little less, to 14.7. That will give you about a 30 PE. But again, this is on the current year. All right, let's go up to the bear case. On the bear case, I am looking at Troy Teslike again, because this is the bear case. So I didn't change the top line at all. I didn't change the second line at all. I'm still looking at 44,005. Then I have the total auto revenue there, and then margin. This is where I changed it. Okay, now I took into consideration what Jeff Lutz said. So I increased it 1% in the first quarter, 2% in the second quarter, 2% in the third quarter, and 2% in the fourth quarter. All right. So this is, again, based on Jeff Lutz saying he thinks 8 to 10% is reasonable for this year. Well, if we don't lower the price, okay, we don't raise the price either, and we only sell 2 million units because we aren't raising the price or lowering the price or doing anything. All right. So I think we capture that entire margin benefit. All right. So if we do that, we end up with these gross profits, 20.4 billion. add in a little bit. I actually have a little bit less in energy here on this one than I did in the prior one. Just make it a bear case. Other profits. Then you've got the same IRA that I included before, 2.2 billion. That gives us a total profit of 28.7, same overhead, and you end up with a gap of 18 billion. Now you're going to give it a 70 PE because now we've got a much larger increase. And if we can see the evidence that it's going to continue, I think you get a 70 PE times your $5.21 per share. That gives you a $365 price point. Okay, now that's where a lot of people are. A lot of people are in that 300 to 350, 360 range right now. And I think maybe they're basing it more or less on this scenario. All right, but that's my bear case. And again, you may like my bear case and say, hey, you know what, Randy? Good for me. All right, now we'll go into a base case. All right. And so in this particular case, I'm going to drop my average selling price in order to create more sales. All right. This is Elon's approach. He says, no, we're going to drop. If we get some savings and margins, we're going to drop the price. We're going to drop the price because we're going to get more metal out the door. So in this particular case, from $44,500, I'm dropping it $1,500. Okay. And now my number that I'm increasing on my margin is less. So I'm saying in quarter one stays the same. Quarter two, only up 1%, up 1%, up 1%. Okay. So we drop the price, but our margin benefit is less because we dropped the price. So some of the margin is happening in the price and some of the margin is being captured. All right. So that gives us a total 18.5 gross profit, energy profit about the same again, other profit about the same, IRA the same. So now you get down to total profit of 26.4, take away the overhead, 15.7 gap, which is about 45, 50% more. I'm saying this is going to earn a 60 PE. And if that's true, then we come up at $273 per share. That's what the share cost should be, barring all the other things that are going to take place. All right. Okay, now we go to the bull case. Now, under the bull case, I'm going to say that we get to 2.35 million cars. Now, that is a little, that's my number right now. I might change that number. I might think it's going to get even higher, but for now, I'm going to go there. Larry Goldberg's higher at me at 2.4. Some others are at 2.4. But on this case, in order to get there, I'm going to say we're going to drop the price to where we're literally now absolutely confident that we're under the sticker price of any ICE car equivalent. Okay. That means, we're dropping the price by $2,500. And last year there was reports out by third parties that said that the Teslas were about $1,300 higher at sticker than their equivalent competitor in the ICE world. So we're going to drop it by $2,500 so that we're sure that we're under sticker. And that should drive the factories to be able to just put out as many as they possibly can. Typically, that would mean we'd raise prices, blah, blah, blah. But anyway, I'm just going to go with this number, dropping the price by $2,500, but we're going to keep the margins exactly the same all year long. All of the margins will stay the same because we're getting benefits in that cost of goods. Maybe not the full 2% per quarter, as Jeff Lutz suggests, but we're going to get a benefit per quarter, which is going to allow us to lower the price without reducing the margins. Does that make sense? Hope you're with me. Okay. So that gets us to 17.8 in total auto gross profit, energy profit staying about just a little bit higher. Again, this is my bull case. So now we're saying maybe we get a few more units out of Shanghai. Maybe there's a lot more Powerwall sales because Powerwall sales are going up pretty nicely. All right, then we get other profit. I think that stayed exactly the same. We got the IRA staying exactly the same. Remember, these margins, these IRA numbers will actually impact margins, but it will not be a separate line item on the financial statement. So you have to watch for this. So the case will be that the margins will actually be much higher, but a piece of that is going to be IRA. And Tesla is starting to report that it exists, but so far they're not making it a separate line item to show how much of that is from IRA money. All right. Then we've got the total profit. We have the overhead. I think I didn't change that at all. Same number. We have the gap now at 15.7. Now we're talking $4.54 a share. I'm putting that's almost a 50% increase. I'm going to give it a 60 PE, and that would put us at 275. So you can see that if we go with my bull case, or we go with the base case, almost exactly the same, 273, 275. If we go with the bull case, the bear case, we actually make more money and get a higher PE going the bear route by grabbing the margins. Makes sense, right? More margins in the pocket. We get to save that money, but you save the money, but you don't get as many cars on the road. So this is the trade-off. And then on the super bear case, we've got back down to where we make a lot less. So if we don't get that margin increase and we keep the prices the same and and we give a very low number of units out for the year, that would be worst case scenario. Okay, so there you have it. Now, oh, by the way, this is just for fun, just so you can see that this is here. This is the number of units you need to keep up that 50% CAGR. So for 2023, they need 5.6 million. For 2024, I'm sorry, I did that wrong. For 2023, we need 1.68. We beat that. For 2024, you need 2.53. Don't think we're going to get there. For 2025, 3.79. I think there's a chance we could do that because we should have a 3 million run rate by the end of the, capacity run rate by the end of the year, not counting the new Gen 3. And of course, the CT, the Cybertruck, will be increasing their numbers in 2025. Then you got to go to 5.7 million. A lot of that's going to have to come from that Gen 3. So it gets harder and harder, as you can see, but you will still get to 20 million by roughly 2029, 2030, if you can continue to maintain those jumps. Now, something's going to have to happen in here in terms of Cybertruck, lots and lots of Cybertruck units, which will maybe not be sold units. So that's another issue. All right. If this was of value at all, please hit like. It helps out. Please hit the like button. Just takes a second. Then hit subscribe. You haven't subscribed yet. And then please hit notify to be reminded that tonight, we have the week we take a look at next week. What's going to happen next week? How's it going to affect Tesla stock, etc.? And then, of course, starting tomorrow morning, we will have, of course, the morning show and Larry Goldberg in the evening, Larry White in the afternoon. You want to make sure that you're notified of all that. Buy your Cybertruck bottle opener and Patreon. We could use a few more folks on Patreon. It's only $3 a month. Or for $5, you're going to get a free book. For $10, you're going to get a free Cybertruck bottle opener and a free book. I mean, come on. It's time to join Patreon. It's been great talking to you.